Average method is somehow the typical method. It requires the calculating of average rate at every transaction, whether it is a sale transaction or whether it is a purchase transaction. Remember, I am repeating, it requires the calculation of average rate at every transaction. How it will be done? Let's see. Again, balance is what? 10 units at the rate of 91. It will make 910 closed by a thick border. Now we have made purchases on August 3. August 3 purchases, that is
15 units at
15 units
106.
at the rate of 106. Now we have to again copy this balance 10, 91 and again 15 and 106. Here we have to calculate the rate, that is weighted average. Weighted average means the total of this and the total of this. So it would be like this. 25 and the total of these two amounts. Now we have to calculate the weighted average rate. This is the weighted average rate. How will it be calculated? This is equals to this divided by this. This will be the weighted average rate, and if I calculate it in the form of decimal, it will be like this. Have the concept of that mean, so it is just like mean, weighted average. Got it? Any
Yes.
issue?
No.
Okay. Now we can close it with the check order. Now we will see the next transaction, that is sale issue. Now there will be no problem for LIFO and FIFO. We will directly issue it the required units on this last calculated average rate. Let's suppose we have issued 20 units. So these 20 units will be issued on this rate. That is 20 into 100. This will be the cost of goods sold. And now we have left with only 5 units. Rate is 100. It will be automatically adjusted. Clear?
Yes.
Again, this would be our balance, so it will be highlighted with the tick border. Now what? After 14 sales, we have made purchases on 17. So purchases on 17 would appear like this. 20 units at the rate 115. Now, for every transaction, after every sale or purchase, we have to update it. We have already the balance of 5 units at the rate of 100. This would appear as same as above. Now what? We have purchased 20 units at the rate 115. This will become 2300 as it is. Now we have to total this amount. And obviously this unit. And we have to calculate this weighted average rate with the same formula, that is this divided by this.
Yes.
Done?
Yes.
This is our balance, so it will be represented by particular. Again, we have made what? Purchases on 28th August. So 28th August, purchases of 10 units at the rate of 119. What we had already balanced? We had balance of 25 units at the weighted average rate of 112. This would make 2800. Now again we will calculate the weighted average after adjusting this transaction, incorporating this transaction. 10 units, 119, total will make 1190. Again we will make total of this and weighted average rate is equals to this divided by This is our new weighted average rate. Since there is no decimal, we can take it to up to 2 decimal points in questions. Okay. Now this is our final weighted average rate. Now subsequent sale would be made on this weighted average rate. Now we have made sales of
Yes.
23 units on August 30. So 30 August transaction would be, that is 23 units at the rate of 114, and this would be 2622, and we have what remaining units, that is equals to 35 minus 23. Obviously it would be 12, and the rate would be 114, so it would be our
And balance.
closing stock inventory, closing stock units, and the total of cost of goods sold would be this. So you get to know how the weighted average rate is calculated after each transaction. Any problem here?